Hello, this is Japanese Economic Review Channel. Today, we will analyze the Cabinet Office's Machinery Orders Report for March 2026 and FY 2025. We will explore macro trends, sector momentum, and the current massive order backlog. This data reveals the true state of Japan's capital expenditure and provides critical insights for our future outlook. Let's dive in. Let's start with the big picture. FY 2025 saw a robust 11.4% YoY growth, reaching 41.37 trillion yen. This strong momentum continued into Q1 2026 with a 10.3% QoQ increase. March 2026 also rebounded with a 4.3% MOM gain. Overall, corporate investment appetite remains in a powerful expansion cycle. Breaking down Q1 growth reveals a bifurcated reality. The 10.3% headline surge was overwhelmingly driven by foreign demand, which spiked by 31.0% QoQ. This massive overseas growth completely offset a sharp 21.3% contraction in government demand. Meanwhile, private sector demand provided a stable foundation. To understand true domestic sentiment, we must filter out the noise. Foreign demand reflects global conditions, while government demand is policy-driven. By excluding volatile ship and electric power orders, we isolate core private demand. This core metric is our most reliable leading indicator for corporate CapEx confidence. Looking at core private demand, the macro trend is solid. FY 25 grew 8.6% YoY, and Q1 2026 rose 6.4% QoQ. However, March saw a sharp 9.4% MOM contraction, impacting both manufacturing and non-manufacturing. We must monitor if this is a temporary pullback following February's surge or a new trend. Within manufacturing, performance is uneven. Our scatterplot identifies chemicals and iron and steel as undisputed growth engines, showing intense momentum in Q1 2026. Conversely, sectors like textiles and petroleum/coal are lagging with significant slowdowns. The recovery is heavily concentrated in specific materials. In the non-manufacturing sector, tech and real estate are leading. Information services jumped 25.1% QoQ, highlighting consistent tech investments. Real estate and leasing also showed strong revivals. These gains effectively compensated for a severe 15.8% QoQ pullback in transportation and postal activities. Turning to the supply side, we see a remarkably healthy pipeline. The order backlog is approaching a record 50 trillion yen, as order intake consistently outpaces sales. This translates to roughly 15 months of work on hand. This massive buffer insulates manufacturers from short-term demand shocks. To conclude, first, our massive Q1 growth is externally driven. We must watch global trends closely. Second, core domestic CapEx is strong, though March's dip warrants caution. Finally, the unprecedented 15-month backlog ensures factories will run at full capacity well into next year. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.